right, take a look at energy commodities at the moment. This is a picture when it comes to oil, New York crude, as well as what we're seeing across natural gas futures as well. Oil, they're extending those losses still. We saw that industry report reporting to an increase in US stockpiles, adding to just already existing bearish sentiment that's really been consolidating over the past couple of months. That API report really just seeing more expansion by 4.1 million barrels last week. We're down, about 5% this week for crude, following that decision over the weekend by OPEC Plus to start unwinding supply cuts in the fourth quarter. Natural gas, though, headed in the other direction. We're seeing upside of about 1.5%. This after we did see earlier declines. US nat gas falls a little bit earlier in the session. That Norway outage, regardless, expected to be brief, and that had been really driving a lot of these supply worries, along with, of course, heightened demand amid hot weather across many countries. All of this has been pushing gas prices higher over the past 3 months. But fresh supply might be on the horizon after South Korea said that a study suggests a large deposit of oil and gas in the waters off its coast. Let's get to Seoul now. Our energy reporter there, Heesu, as well as the Bloomberg BNEF APAC head of research, Ali Izadi, to talk through the implications. So, Heesu, let me start off with you. Tell us what we know about this gas discovery, who would benefit, and how quickly can this come to fruition?
Yeah, right. The South Korean president has announced on Monday that the country has discovered a deposit in the waters off the southeastern coast that may hold as much as 14 billion barrels of oil and gas. Now, the plan to develop this project has been approved, and drilling will start at the end of this year to evaluate the actual level of reserves, and we'll get to know the result in the first half of 2025. Now, the Energy Ministry said the drilling will take place about 7 to 10 years, and once the exploration is complete and once they confirm the economic viability, then South Korea can actually start commercial production.
How will it impact Korea's broader energy policy?
So the fact that Korea is so excited about this new discovery is because Korea imports all of its fossil fuel needs from overseas. And the plan to develop this project is actually a part of Korea's effort to reduce its reliance on energy imports. And it also comes only a few days after the country has announced the long-term electricity supply and demand policy plan, where it's planning to increase the share of nuclear power and renewables from the power mix, which is also going to ultimately help the country reduce its dependence on energy imports. Now, this is a trend that we are seeing more across the globe after the energy crisis in 2022, where countries are looking to increase their ability to reduce their dependence on expensive imported fossil fuels.
So, Ali, let me turn to you. What's the long-term demand picture looking like globally?
So when we look at natural gas specifically globally, right now we actually see under our economic transition scenario, between now and the early 2030s, a moderate decline in demand, primarily driven by lower consumption in the power sector as regions such as Europe accelerate away from reliance on burning natural gas for power generation, while in emerging markets, still the relative poor economics of natural gas compared to coal hampers uptake. After the sort of early 2030s, again, if we look at it under an economic transition scenario, which excludes any of our climate goals, then we can see actually demand rebounding, particularly driven by industrial sectors, such as use of natural gas as feedstocks for chemicals, towards 2050. So in that scenario, by 2050, we are looking at a world where we are consuming 12% more natural gas compared to 2022 baseline.
How does this potentially impact energy transition efforts? Is gas really, when it comes to being a transition fuel at this point?
Yes, so proponents of natural gas often refer to it as a transition fuel, and certainly better, efficient use of existing gas infrastructure can help with the transition. If you look at markets such as the US, where the advent of abundant, cheap shale gas ushered in a lowering of dependence on coal in favor of gas, certainly had an emission impact in terms of improving emission reduction. Open cycle gas turbines are also good technology in terms of supporting uptake of renewables. But when we look at it globally, from the perspective of investment in new infrastructure for gas, particularly around new upstream production, such as the field that's being discussed here in Korea, the problem is that the emission math doesn't add up. If you look at in the short term, one of the challenges with natural gas, with its main component being methane, is that methane is actually a powerful greenhouse gas, particularly when you look at it on a shorter time span. While methane does decompose and over a long term has a lower emission impact, in the shorter term, it actually causes more global warming. So handling unabated methane emissions is actually a big challenge that already the industry faces. Over the long term, the additional challenge with investing in new upstream production is that you're looking at recovery periods where you run into the remaining carbon budget not being available. So, for example, in the case of Korea has a net zero by 2050 target. Even if this new field is capable of producing economically, if you look at economic production from early 2030s, then essentially we don't have enough time to meet that 2050 net zero goal to make sure that the investment is financially viable.